Welcome to part 8 of the Trading Masterclass. In this class, I'm going to be discussing faux pas, or things what not to do, things that you shouldn't do, something like that. Yeah, let's go with faux pas. I like that better. All right. In this video, I'll be discussing chasing losing trades, trading with hope instead of analysis, not taking trading seriously, and expecting to get rich quick without putting in the time for education. So the last one's a little bit long-winded, but it's pretty self-explanatory. Okay, you know what? I'm actually going to start backwards from expecting to get rich. All right. The worst thing you can do is jump in any sort of thing that's new to you and expect you're going to be successful from the onset. All right? Now, rhetorically, answer this for yourself. At what point have you ever dived into anything new without an education and have been successful at it? Okay, I can tell you personally, it's been a whole bunch of nothing. It's been 0% of the time that I have been successful if I haven't learned about something. Any businessman, any entrepreneur, any employer, any employee, any apprentice, whatever, you do not get good at something you just started. It takes time, it takes practice, it takes experience. It also requires education. Now, granted, there's certain things you don't really need an education for. It requires more muscle memory and skill and experience. But to make sense of this entire situation, do not jump into Forex trading or into the stock market thinking that you can just throw money at it and it's gonna give you a nice return. Because there is a lot of people and there's a lot of companies and there's a lot of bullshit that tells you, hey, just subscribe to our channel or just subscribe to our newsletter or just pay us a monthly fee and we'll do all the work for you. All you got to do is put in your money. Bullshit. Okay? Bullshit. What I am teaching you here is to be self-sufficient. Now, if you really want to join those subscription services, that's on you, okay? The only difference is if you jump into the subscription services with the knowledge that I'm giving you, you will be able to tell if what they're selling you is true or if it's bullshit, okay? And I can tell you right now, there's very, very, very few companies that are selling a good bill of goods, so to speak. Okay? All the ones that want to sell you signals, bullshit. All the ones that say, oh, join us for free and you can have all of this wonderful stuff. All you need is, we give out the free signals, but if you want our premium, then you got to pay X amount of dollars a month. Guys, do you know what those premium signals are like? They give winning trades that are like 30 pips, 25 pips. Great. I mean, you saw in my chart analysis, I'm giving signals that are worth hundreds of pips. And I'm not making any money off it because I don't care about making money off of you. Okay? This is such a unique thing to learn that I can make money doing the actual thing. I just want more people to jump in on this with the peace of mind knowing that what they're doing isn't guesswork and they have some sort of frame of reference. Okay? So, again, to reiterate, do not jump into Forex or stocks expecting to get rich quick without putting in the time for education. And in the description, I'm going to be posting a lot of good books that are great references for this sort of thing. It will help with mindset, especially on the next video. That's where I'm going to get into, is how to kind of retrain your brain to use money and not be scared of it. right? It's difficult for a lot of people, but we'll jump in on that in the next video. Okay. Number 2, taking trading seriously. So I can show you right now on the chart. Let's say we see Bitcoin right now, okay? And let's just do a simple Fibonacci where it was at its low in the 2000s, okay? Watch this. So let's just grab it from this point right here to the high right here, okay? And I'll draw it across. Fantastic. Look, it's bouncing off that 618 several times. So what does that tell me? If there's a potential chance for it to hit that 618, I'm going to take a buy, right? We've established that retracements on a lot of Forex pairs, cryptocurrency especially, 618 is kind of the magical number for it to bounce off of. But you got to make sure that you have enough of a stop loss in order not to be knocked out of a successful trade. Okay, so let's say, for example, I took a position here, okay, right at the 618, right where it hit the 4th time or whatever it was. Stop loss, I'm going to do it to the EMA. It's still pretty deep, but you know what? Maybe I'm just going to do it to the bottom of these pins because it seems like it doesn't want to go lower than that. So I'll take a risk, all right? And I'm going to do it to the previous high that we saw right there. So very nice trade, 13.5 to 1. Let's see what happens. Oh, see? So there we go. It hit the 618 one more time before taking off. So is that a case of jumping in too early? It possibly could be. The trouble is it hit that spot 4 times already. So the chances of it coming back more often are very rare. However, this is completely up to the individual, right? If you want to keep your stop loss where it's at because you're comfortable for it to be at the bottom of those pins, because look, it didn't even break through it, right? It just hit the bottom area. There's going to be people that move their stop loss to break even once it is past that, and that's what I teach, right? Just for safety's sake. If you want to be riskier, by all means. But all I'm saying is, look, even on the 4 hour, right? The 4 hour is going to be the best indicator rather than the daily. You can get tighter entries. Look what happened. Entry taken, EMA shift, and then shifted back down. I would have probably exited around there, right? So I could have snagged, let's see, 10% or $3,000 worth of Bitcoin. Great, right? And then it just zigzagged and kept going down. However, if I see it going down, I'm like, hey, you know what? Maybe the original entry is going to be a valid spot. Sure enough, it would have been, you know, and that would have sucked. I mean, it hit right there and it consolidated for a day or so, but then profit, right? So that's just 2 different ways of looking at this trade, and this would have been happening over the course of several weeks, right? So I wouldn't discount that spike up because look at this, right? Watch exactly what happened, right? If we take the Fibonacci and draw it from here to this bottom, right there, 618 rejection before dropping, but not making a new low, right? That's important. If it doesn't make a new low, I would really consider the larger Fibonacci in play. Okay? Anyway, so what I was talking about, taking trading seriously. All right? This comes at a point where if you didn't do your analysis and you saw the drop coming, it's like, ooh, I'm going to buy it for cheap. And then you bought it like right here at May 19th, 2021. All right? And then you stayed in that price for 71 days before it actually recovered to what you purchased it at. Now, if you're in a trade for over 2 months and it comes back to your original position, what are the chances that you're going to let this ride to the new highs? It's very small, isn't it? Because you've been on the losing end for 71 days. And the chances are that you're going to sell as soon as you break even because, damn, I was sitting in a loss for so long and I was so worried that it was just going to break me out. I thought it was going to go lower and finally I got my break even, so I'm done. Okay? So, yeah, pretty bad. Jumping into the market when you don't understand what's going on. But that's when you just don't take it seriously. You kind of jump in, throw your money in, it's like, whatever, it's going to go up. I don't need to pay attention to it. Yeah, right. So let's keep going and see if you feel that way after it does its final moves. Right? Oh, and now here's the thing you gotta pay attention for. Because once you see this happening, again, lots of people are going to jump out because they get skittish, right? But now look, low, high, what's the retracement? It just hit the 50% and stayed there, right? And look at the white EMA. If it didn't break through that, if it didn't go any deeper, I'm comfortable, right? If it would break the 618 and kind of stay there and start trickling down, yeah. I mean, it would suck. I would have lost a nice profit, but you know what? It's still some profit and no loss. So still okay. But now look, rejected, went higher. And now TP hit. Fantastic. And what was the TP? 13.5 to 1. How long were you in the trade for? It would have been from here to here, 91 days. So 3 months. You know, not too shabby. But again, it's a 3-month trade. Maybe around this part where you saw that peak and then a big red candle down, that would have been your first exit. Okay? Now watch what happens. Okay, all the stuff that's going on. Okay, so now we hit a high. We see it going lower. Okay, great. This was the last retracement volume. So let's see what happens from here to here. Right? Okay, 618. Oh, it crushed all the way down to the 886, but it closed in the golden zone. Let's see what that means for us. Oh, now we made a new low. So now, at this point in time, I am no longer in buy mode. You understand? I am no longer looking to buy Bitcoin. If it hit that point right there, if it broke down through the Fibonacci and it made a new low, this is a terrible time to try to take buys, because at this point, it's what traders call trying to catch a falling knife. Okay, now if you don't know what that means, throw a knife in the air and then try to catch it if you're not a juggler. Okay, I don't actually advise you doing that, but you can see how stupid that would be, right? Most people jump out of the way and let the knife hit the floor. This is the same practice I want you to have. Jump out of the way and let the knife hit the floor. Once it hits the floor, then you can pick it up. Okay, and now we need to determine where our floor is. Okay, and one way of doing that is a trend-based fib extension. So high to the low to the next high. So it looks like the potential low is going to be around 33,000. So let's see what happens. Maybe it's going to pull up from that point. And it did. Okay, how high is it going to pull up? Like I said, we made a new low. So our first sign of the pullback, that's where the fib would be drawn from, which would be here, down to the bottom, and we drag it across. 618. You see? So, I mean, I'm going to put it because I knew that was going to happen regardless. But so it hit the 618. I'm looking to take an entry right at that 618. And this just above that previous high. So on the white EMA looks good. And then I'm going to take it, you know, who knows how low it's going to go. But, yeah, originally I'll take it there. So 6.7 to 1. So let's see what happens, right? Oh, see, we hit that area twice. Oh, and that sucks. So it looks like it pulled up to the 786 before rejecting. Right? It happens. It's not going to be a perfect trade every time. You just have to understand how to mitigate. If we didn't make a new low, right, from the original entry area, don't jump into the trade. Or don't stay in the trade, more importantly. Okay? So now it looks like it's consolidating. And there's our new low, right? So here we are. Unfortunately, you saw we did a very tight stop loss. And if you didn't, this could be much nicer. Anyway, Bitcoin isn't my specialty. It just requires analysis just like everything else. But again, if we would have taken volume around that area, you could see the height is over there. We could do another retracement, yada yada. But 786 is still within the golden zone. Okay? All I'm saying is that this is a great indicator that we're making new lows, right? So you saw here, this area, right? We kind of hit off that spot. This was a new low, right? So this is where we start our zero from our Elliott wave, right? That was, this spot was lower than this spot. Okay, so now this one's in play. And now this spot is lower than this spot, so that's invalid. That's invalid. So we're making lower lows. Okay? All that means is once we tried to figure out where it's rejecting from, you know, and again, it's a bit of a bummer. I would have hoped to get a better entry on that, right? So, I mean, if it hit the 786, it's kind of a bummer because it did pop up just above the 618 briefly, and then it kept going down, right? So, you know, there's a potential chance it was just within that volume range, you know, or you can draw volume from high to low when it was doing its run. You could see where it's going to be consolidating, right? And the other key thing would be to, if you'd want to jump in on a trade that's not exactly at that, but just maybe a little pullback, you can see right here it pulls back, volume is very close, right? I'll make sure I draw that red, that's my, okay. There's volume, it breaks through, kind of bounces off there one time. So once that happens, once you see that kind of breakthrough and it's not doing the 50%, you know, this is a decent trade to enter. But, you know, it really just depends on you and what it is that you see. So, would have been pretty good. But all I'm saying is if you miss that, stay out. Okay? There's no sense in trying to catch it. The other, I mean, if you understand engulfing candles and the fact that EMAs run through them, this is actually a great sign for a late entry. When you see that candle pattern, the likelihood after that close of the next candle being red is like 92% or something like this. So very high. Just remember, as long as it's within the original trend, right? So if we have EMAs all pointing down and then this happens and goes through both EMAs with both of those candles and then one engulfing, very good sign. Okay. So anyway, back on target to what I was talking about before. All right, not taking trading seriously. This is what I'm talking about. When you would be taking buys. Okay, let's say you hit the low here and it's not making a newer low. This is exactly what people want. Look, a high, a higher low. Oh, great. Oh, well, that one kind of, oh, higher low. That's great. Oh, a new high. That's fantastic. We're on our way up. And now in this area, right here, as you can see, over the span of 5 days, traders jump in. All right? People jump in and take positions for buys right here, or they purchase the actual commodity. And then that happens. This is what's called a bull trap. Okay, this is exactly what hedge funds and institutional traders are waiting for. Okay, they're waiting to trap people in something like this. That's why, you know, you see that consolidated area. Once it breaks through briefly, but it doesn't start going higher, it just goes sideways. GTFO. Get the F out. Okay? Here, look, same idea. You see it kind of started slowly going down, then it peaked up, and it stayed there for a week. GTFO. All right, look, we're going to see this more often, right? I'll keep playing it forward. Here's another great example. Starts consolidating, going sideways. People are like, oh, that's got to be the bottom. It's not making a newer low. It's just going sideways. Do not enter any trades ever, ever. Look at the histogram and the signal line compared to the candles. This is going up. This is going sideways. What's that called? Divergence. It's not matching up. There's something screwy afoot. Stay the F out. Okay? Because that is what you could be jumping into afterwards. It's a terrible decision to make. And then, Slight pullback. And what are we going to see? That's the end of the replay. Okay, so that's where we're currently at. So here's the thing, right? Where you saw that it made a newer low, and then you'd want to take a buy, okay. And you would have been able to make maybe 10, maybe 12,000 if you held on for a couple of months. Okay? Once you understand with the fib lines and the volume and all this sort of stuff, because look what happened here. I mean, I drew that kind of screwy, but if we take that horizontal line on the low, look, this support becomes this resistance. Okay? So I can tell you right now, because this was consolidating and it was kind of bouncing off the top there, any sort of time it peaks up and rejects off something, I'm going to be looking for a sell. And now look at this, right, where we're currently at. This is the high, this was the bottom, 50%, and down we go. However, we're not making newer lows. What does that mean? We're probably going to get a higher retracement. So there's no reason to jump in just yet. This could easily pull up back to the 786 like we saw up here compared to this one, right? So this one, like again, this high compared to this low, we could be seeing something to come up all the way here. So I'd be looking for this kind of trade. Maybe a 10-to-1 ratio right there. Okay? Just showing you, again, you didn't miss anything. You didn't miss trades. Don't get that feeling where, oh, you know what, if I don't jump in now, it's going to be too late. Or now it's like, hey, it's not making new lows. Maybe this is the bottom. Maybe it's going to go up. Do your analysis, please. Okay? If you can see how the market is going right now, this is telling me that it's a bad idea to jump in. The only time I would say maybe we've taken a different turn is when this high right here gets broken and the new high is going to be there before pulling back down and then going up again. Okay? That's the only time where you see where it gets broken through like that, especially when it's the peak of a fib. Okay? Other than that, no bueno. No good. Do not take those trades. All right. Finally, trading with hope instead of analysis. I think I kind of covered that with the trading education part, but the hope is basically where you jump in and it was consolidating here, okay? And you didn't take a stop loss because some people out there told you that putting a stop loss is how the institutionals get rich. Don't set a stop loss, man, because it's just a ploy. Stop loss is how they get you. No, stop loss is how you get yourself, okay? If you don't set one, you'll learn very quickly that you should have set one. That's how it's going to play out for you, I promise. Okay, if you take a buy here and then it drops and hits your stop loss, then you know what? Maybe you should let it ride and see where it goes, because if you see that happening and it hit your stop loss, oh, thank goodness, I only lost 2 or 3%. Now you let it ride in hopes that, like, oh my God, I'm down 20%. What am I going to do? I'm down 50%. What am I going to do? Should I sell it, or is it going to bleed a little longer? Oh, a little bit of relief. Now I'm only down 35 or 38%. Oh no, I'm down 46%. Should I sell? Am I going to be getting back down to the 50 again? That's how it's going to play out. If you want it to play out that way, if you like living I don't know, like a scared fish or something like this, go right ahead. You know, take all the buys that you want, drain your account, lose everything, and then say, oh, this is bullshit. I can't, you know, trading is for suckers, and that's how they get you, and they want to steal everything from you, and blah, blah, blah. Okay, the only time people become skeptical is when they get screwed based on having no knowledge of what they jumped into. Okay, this is what I'm trying to prevent from happening. So when your stop loss gets triggered, analyze why it got triggered. Okay, maybe it hit that perfect point before reversing, or maybe your stop loss got crushed and the the pair or the index or the commodity kept going in the opposite direction, analyze why. Why? What point is it coming to? Draw a line and see, hey, you know what in the past could it possibly bounce off of? Okay, very important. And now finally, do not chase trades. Now, chasing a losing trade, this is probably the worst thing that you can do. Okay, worse above than everything else, because this is how you bleed, death by 1,000 paper cuts. And what I mean by that is this. Okay, you took a buy here, it triggered your stop loss, consolidated again. It's like, oh, I'm going to take another entry right here, and then it went down, boom, triggered your stop loss. Oh, now it's consolidating again. Okay, excellent. So, oh, I see a big candle. Pulled back a little bit. Oh, but it didn't go as low. I'm going to enter right here. Right there. Sweet, I'm a little in profit. Broke your stop loss. Keeps going down. Okay? And then finally, you're like, okay, yeah, EMA shifted. Great, I'm going to take a buy here. Now it's, oh, great, I'm finally in profit. I'm 1 month in profit. That's great. Oh, stop loss because I'm at break even. You know, this actually isn't as painful as the first three. Okay? This is what I mean by chasing a losing trade. You're trying to catch that knife here. You're trying to catch that knife here. You're trying to catch that knife here. You're hoping that this is the bottom, right? I don't want to miss out. I hope I grab the bottom. Because I keep hoping I'm grabbing the bottom, I'm assuming that it's going to go up and I'm going to be like, yeah, look at that trade that I sniped. It's perfect. It was right at the bottom. Now I'm in profit. Woo! Does that happen often without analysis? No, it does not. It's very infrequent that you'll be that lucky to catch this trade right here, let's say, and still be in profit, even though it's minor. Over the last, 3 months, 4 months? Let's just double check because this was way back in June. So 91 days, exactly 3 months, okay, to be barely in profit. Is that what you'd want to be sitting in? Because I don't think I would want to. Okay, so now this comes the important step. Let's reanalyze. Let's see how high a pullback is going to come. Where was the last spot that we had anything? Right here. What do? Fib, high, low, boom. We hit the 50%. We're not making newer lows, which means that this is going to pull back a little higher. How high? I don't know. Maybe there, maybe just here, right? Don't try to catch that falling knife, because realistically, if you know that it's going to be going down, maybe aim it a little higher if the EMA shift happens on the 4 hour. Around this zone, as the EMA shift happens, that will be another good sign to take an entry. And then from whatever high that it was, that's as high as I would set my stop loss. Okay, and look, even just in here, kind of the mini fib. This is the one that I drew up, right? From here to the bottom. I'm like, perfect. So entry is going to be right there. Boom, done. And just to show you what I'm talking about, watch this. Load. Let's load that up. I'm just going to make sure load layout, this one. Okay, and I'll just close this off because I messed up. What is that? Yikes. Alright, so now I'm going to close this off. Hopefully I don't get any weird error message. Oh, I guess I did. Alright, well that doesn't matter. So, back to here, on the layout that I had before. This is the trade that I set up. Okay? Look at that. Beautiful. And even here I noticed that this giant imbalance, alright, look what it hit off of. Here, down, or the high of the retracement, all the way down, 618 on the fib, take the trade there, and oh look, it's not a huge trade by any means, but currently sitting at, 2,000 whatever. Realistically, it's a 2.26 to 1 ratio, a winning ratio right now. Pretty good. Okay? Because I am waiting. Game of patience. All right, guys? So just to recap the 4 major things of what not to do. Number 1, do not expect to get rich from this without education and experience. Just like any other job out there, you will not make good money once you just jump in for the first time. Those stories that you hear of the people that do, they're prodigies. Okay? It's not going to happen to everybody. When you get suckered into a group that has 10,000 members and only 3 of them are millionaires, it's kind of telling you something. All right? Maybe a couple of them found success. Maybe a couple of them made $15, $20, $50, $100,000. And then maybe they're losing it. Maybe they can't break that threshold. Okay? It's a mind game more than anything else. And again, I'll talk about it on my mindset video coming up next in the series. Number 2, take it seriously. The worst, one of the worst, or, maybe if it's not one of the worst, it is the worst thing, is not taking it seriously and just randomly taking trades, jumping in at awkward times, not doing your analysis, just needing the feeling of having to be in the trade regardless if it's going to be a win or a lose, but you need something there to watch and pay attention to because you'll be bored if it's not. Exercise your patience. It'll pay off in the end. Trading with hope instead of your analysis. Just, self-explanatory. Analyze before you enter any trade. Do not jump in based on irrational thought or the hopes or a signal that you get from someone somewhere that says it's going to be a fantastic trade without analyzing it yourself. And finally, chasing losing trades. Okay? When you're expecting something to go up and it slowly keeps dropping, stop trying to catch that knife. Best thing is, hey, maybe you want to push that knife down. All right? Don't catch the falling one. Aim to enter once you do your proper analysis. All right, folks, I hope that this has been helpful. I'll post a couple of books in the description so that if you're interested in reading, it'll help with mindset, but they'll definitely be available in the next video. And I would say if you have trouble letting go or detaching your mind from the intrinsic value of money, the next video is going to be crucial for you. Okay? I hope to see you then. Take care, everyone.